In this video, I'm going to tell you a way that you can change your investing focus to make more money for your portfolio long term. Hi, my name is Gary Mishuras. I'm the managing partner and chief investment officer of Silver and Value Partners. So if you've been watching stocks and the markets over the last week or two, not much has changed. Well, except maybe my hair has grown a bit longer, but hey, that's the times we live in, right? With isolation and all that. So I'm gonna tell you a way you can change your focus that's going to help you think about your investments a bit differently. And maybe you've been thinking about them. So a lot of you probably are watching the stock market, watching stocks, and are saying the markets are up this or they're down that, or this stock is up this much. And that's okay if that's kind of your thing. But if you're a long-term investor, there's something better than you can do. And here's what it is. You can look out, say, 5 years and pretend you're looking back on today and try to do kind of a pre-mortem, which is kind of a post-mortem that you do in advance, and say, okay, which of my businesses do I think gained meaningful value and why? Which of my companies have been able to really increase their competitive advantage, and in what way? Alternatively, maybe which of my companies were really dependent on the depth and length of the recession? And the reason to ask that latter question is, well, I'm going to tell you, you don't know how long this recession is going to be, and neither do I, and neither does anybody else. And if you meet some, talking head who's going to tell you that they know the exact length and depth of the recession, they're full of it. They don't. So to the degree that you have companies that, are at the mercy of external circumstances to survive, or at the very least to survive without diluting your investment ownership in them in a meaningful way, that's a little dangerous, and you have to think about that. On the other hand, there are companies that are so well entrenched that maybe they're able to take advantage on the weakness of their competitors and build their competitive positions and gain market share, or develop new products by investing when others are retrenching and just trying to survive. So that's just something, a contrast for you to think about. And that's very different than sitting there in front of your screen watching which stock is flashing green versus red. Another thought is, well, what companies do I own that have the fortitude, the culture, and the liquidity to make attractive long-term investments? Because look, the standard mantra for management right now is what? We cut our dividends, we stop buybacks, we have an abundance of caution, there's great uncertainty, these are unprecedented times. Okay, we've heard it before. We get that. It's not that it's not true. It's just, okay, how many times can we hear the same thing over and over again? What we want to know is, yes, you have your abundance of caution, but maybe you've been cautious before as opposed to now, and you built your business in a way that you can take advantage of a really attractive investments and create future value that others aren't willing to. So maybe most CEOs are running scared to their board saying, we got to retrench and just survive. And maybe you're the CEO or your company's CEO is going to the board saying, hey, yeah, we have to be careful, but we have enough firepower to do X, Y, and Z. And X, Y, and Z as a deployment of capital is really going to create meaningful intrinsic value per share for our shareholders, and we ought to do that right now. So those are some of the questions you want to think about, because when you look back on this time, you're not going to forget coronavirus. It's probably going to stick with you for a while, but you're going to forget which stock traded at what price on which day, which you're going to remember a few things. One, you're going to remember if your company went bankrupt. That's going to be pretty memorable. Two, you're going to remember if your company essentially came close to going bankrupt and was forced to issue distressed securities at egregious prices, egregious to you, the investor, and really favorable to the buyers. And three, you're going to remember companies that were able to become bigger and better through the cycle and come out stronger on the other side and say, wow, these are really the companies that on a 5 and 10-year basis have really compounded value and have really added meaningfully to my long-term investment returns. So that's kind of the lens I would encourage you to think about. Sure, be opportunistic, look at prices to the degree they help you find opportunities in the markets, but think about the underlying companies and how the value is changing, not just the prices that are kind of flickering on your screen. I hope this has been helpful to you. If you like this video, please hit like and subscribe to my YouTube channel. Thank you, guys.